Have you ever heard of a sewer capacity charge? If not, don't worry. Most people haven't. But depending on the home you're buying, it could be something that you're going to end up taking over as the buyer. And in some cases, the remaining balance can be tens of thousands of dollars. And that's just one of the hidden costs that can catch buyers completely off guard when they're purchasing a home around the Seattle area. I've helped hundreds of buyers over the years, and I've noticed that it's usually not the purchase price that surprises people. It's all of the other costs that don't show up when you're scrolling Zillow or plugging numbers into a mortgage calculator. Things like underground oil tanks that were never properly removed, HOA dues and special assessments, closing costs and prepaid expenses, the first few months of unexpected home ownership expenses, and even ways where we've negotiated for sellers to cover tens of thousands of dollars in buyer costs that many people don't even realize are negotiable in today's market. So in this video, I'm going to walk you through the hidden costs I think every buyer moving to the Seattle area should know before they write an offer. And make sure you stick around until the end because I'll explain the sewer capacity charge I mentioned earlier, what it is, how to spot it, and why it can have a much bigger impact on your budget than most buyers expect. But first, let's start with the cost that almost everyone runs into before they even get the keys. Let's start with the one that catches a lot of buyers by surprise, especially if you're moving here from another state. When most people are planning their budget, they're thinking about two numbers: purchase price and the down payment. But there are also closing costs and prepaid expenses. And that can include things like lender fees, escrow and title fees, prepaid homeowners insurance and property taxes, and other costs associated with closing on the home. There's also a few upfront expenses that happen during the transaction itself. For example, a home inspection in our area will cost somewhere around that $500 to $800 range, depending on the size and age of the home. And if the home has a sewer line, I definitely recommend adding a sewer scope inspection. That's usually another couple $100s, but it can identify problems with the sewer line before you close, which could potentially save you thousands of dollars down the road. Your lender will also typically require an appraisal, and that generally runs somewhere around $750. Sometimes more if you need to rush the appraisal to meet a tight closing timeline. Another thing that surprises a lot of buyers is earnest money. This isn't an extra cost, it's just a deposit that shows the seller you're serious about buying the home. And it is credited back towards your down payment and closing costs at the closing table. What catches people off guard though is the timing, because once your offer is accepted, you'll usually need to deposit those funds within 2 to 3 days. So while you're already planning for your down payment and closing costs, you'll also need to make sure those funds are readily available and liquid. None of these costs are necessarily huge by themselves, but they all start adding up, which is why it's important to understand them before you write an offer. Now here's the good news. Just because these costs exist doesn't necessarily mean you're going to be paying all of them out of pocket. Depending on the market conditions, the home, and how the negotiations are going, we can often negotiate for the seller to cover some or even a significant portion of your closing costs and prepaid expenses. For example, I recently represented a buyer where we negotiated over $30,000 in seller concessions, which covered a large portion of their closing costs and prepaid expenses, and also some interest rate buy down. Now that's certainly not guaranteed, and every transaction is different, but in today's market, there are definitely areas, price points, and properties where sellers are much more willing to offer concessions than they were just a few years ago. That's why it's important to understand the market you're buying in instead of assuming you have to pay every dollar for yourself. One of the biggest things I tell my buyers is don't assume the list price tells you everything. There could be two homes that are listed at the exact same price, but they could end up costing you completely different amounts out of pocket depending on how the offer is structured and what we're able to negotiate. And that's really the theme of this entire video. It's not just about what a home costs, it's about what it actually costs to own it. HOA dues and special assessments. The next hidden cost I want to talk about is HOA dues. Now, they're not necessarily hidden, but the health of an HOA can have a big factor on how much that costs you down the road. Now, just because a home has an HOA doesn't automatically mean it's a bad thing. In fact, a lot of neighborhoods around the Seattle area that people love, especially on the east side, have homeowners associations. Those dues often go towards maintaining neighborhood parks, trails, landscaping, entrances, private roads, common areas, and in some communities, even amenities like clubhouses, pools, or sport courts. The important thing isn't necessarily the monthly HOA payment itself, it's understanding exactly what you're getting for it. I've had buyers tell me they found two homes that were almost identical in price, but one had HOA dues and the other one didn't. My first question is always, what does the HOA actually cover? Because sometimes paying a little more each month means you're avoiding maintenance expenses you'd otherwise be responsible for yourself, or you've got some incredible amenities that you wouldn't have in another neighborhood. The other thing I always encourage buyers to look into is whether the HOA has any upcoming special assessments. A special assessment is when the HOA needs to raise additional money for a major project that isn't fully covered by its reserve funds that they have in the bank. Maybe it's replacing roofs on a townhome community, resurfacing private roads, repairing siding, or any other large capital project. That doesn't mean every HOA is going to have one, but it's something you want to know before you close, not after. One of the things we do during the transaction is review the HOA documents so buyers understand the rules, the financial health of the association, and whether there are any known assessments or major projects coming up. Again, it's another example of why two homes with the exact same purchase price can have very different monthly costs. And speaking of monthly costs, the next thing I want to cover is something that can actually help you lower your monthly payment if you know it's available. One cost you may not have to pay, your interest rate. Now I know that sounds interesting, but so far we've talked about some of the expenses buyers need to plan for, but here's something a lot of relocation buyers don't realize. Just because today's interest rate is, let's say, somewhere in that mid 6% range, doesn't necessarily mean that's the rate you'll actually be paying. Depending on the market, the home, and how the deal is structured, there's situations where buyers can negotiate the seller to help buy their interest rate down. That could be through a permanent rate buy down that lowers your interest rate for the life of the loan, or sometimes through temporary buy down programs like a 3-2-1 or 2-1 buy down, where the seller helps reduce your payment during that first 2 to 3 years. The right option really depends on your financial goals, how long you plan to own the home, and what your lender recommends. The important thing is simply knowing that these options exist. I've had buyers use seller concessions to cover closing costs, use them to buy their interest rate down, or even split concessions between the two. Sometimes lowering your monthly payment makes the most sense. Other times, reducing the amount of cash you need to bring to closing is the better decision. That's why every negotiation is a little different. One of the biggest mistakes I see buyers make is assuming they have to accept whatever financing terms they were originally quoted without exploring what other options might be available through negotiations. It's another reminder that buying a home isn't just about negotiating the purchase price. Sometimes the structure of the deal can have a way bigger impact on your monthly payment than you think. Now, while we're talking about unexpected costs, the next one is something that is much more specific to older homes in the Seattle area, and it's something I always encourage buyers to investigate before they remove their inspection contingency. Hey, and real quick, if you're planning a move to the Seattle area and you're wondering what your budget actually looks like here, feel free to reach out. Every buyer's situation is different. Some buyers are better off using seller concessions to lower their interest rate. Others are better off applying those concessions toward closing costs. It really just depends on your goals, your loan, and the home that you're buying. I'd be happy to walk through your situation, explain the options available, and help you put together a strategy before you ever start looking at homes. Now let's get into costs that are much more specific to the Seattle area, one that can affect older homes and another that commonly shows up on newer construction. These are two things I see relocation buyers completely miss because they simply aren't common in other parts of the country. Older homes and underground oil tanks. Now let's talk about one of the more unique things buyers can run into around the Seattle area. Many homes built several decades ago originally used oil heat before natural gas and electric heat became much more common. Today, a lot of those homes have been converted to natural gas or heat pumps, which is great, but one question still needs to be answered. What happened to that old oil tank? Sometimes it was properly removed, sometimes it was decommissioned in place, and sometimes there simply isn't any documentation showing what happened with it. That doesn't automatically mean there's a problem, but it's definitely something I want to investigate before my buyer moves forward. If there is an underground oil tank that was never properly removed or decommissioned, it can become an unexpected expense. And if there's ever been a leak or contamination, the cost can increase significantly depending on what remediation is required. That's why when I'm helping buyers purchase an older home that may have been heated with oil, one of the first questions I ask is, was there ever an underground oil tank on this property? And if so, do we have documentation showing it was properly removed or decommissioned? Those are conversations I'd much rather have during the inspection period than after you've already closed on the home. Again, this doesn't mean every older home is a problem. I've helped plenty of buyers purchase older homes that had no issues at all. The point is simply knowing the questions to ask before you move forward. And speaking of questions buyers don't always know to ask, the next hidden cost is one that shows up on many newer homes around the Seattle area, and occasionally even some resale homes. And depending on the property, it can involve tens of thousands of dollars sometimes. The sewer capacity charge that can surprise buyers. Remember at the beginning of the video when I mentioned there was one charge that can sometimes add up to tens of thousands of dollars? This is what I was talking about. Depending on the city, utility provider, and specific property, you may come across something called a sewer capacity charge. Now, if you've never heard of that before, you're definitely not alone. A lot of relocation buyers have no idea it even exists until we're reviewing the title report. Here's how it generally works. In some areas, when a new home is built and connected to the public sewer system, there may be a sewer capacity charge associated with that property. Sometimes the builder pays it off before the home is sold. Other times it's financed over a number of years and the remaining balance could transfer when the property is sold. That's why you'll occasionally see a newer home and even some resale homes that still have an outstanding sewer capacity balance. Depending on the property, that remaining balance can sometimes be over $10,000. Now, before you panic, this isn't necessarily a bad thing, and it definitely doesn't mean you should walk away from the home. It simply means it's something you want to identify early in the process. Whenever one of my buyers is looking at a property where this could apply, one of the first things I want to know is there an outstanding sewer capacity charge? And if so, how much is left? How is it billed? And is it something we can negotiate with the seller? A lot of times we do just have the seller pay these off at closing and it's no issue at all. Just like we talked about through the video, knowing about the cost early gives you options. Maybe the seller agrees to pay it off before closing, which is super common. Maybe we could negotiate the credit to help offset the cost. Or maybe you simply just factor it into your overall budget before deciding whether the home is still the right fit. The important thing is that you don't want to find out about something like this after you've already fallen in love with the house. And honestly, that's really the purpose of this entire video. None of these things are meant to scare you away from buying a home around Seattle. I just want you to be aware of them. And of course, I want you to know the right questions to ask before you write an offer. Because the more informed you are up front, the fewer surprises you're gonna have down the road and after closing, because that's never fun. Buying a home isn't just about negotiating the purchase price, it's about understanding every piece of the transaction so you can make a confident decision. If you're planning a move to the Seattle area and you'd like for me to review a home before you make an offer, I'd be happy to do that. Sometimes a quick conversation about the property can uncover questions that you didn't even know to ask. My contact information is on the screen and down below. We've covered a lot already, but there are still a couple of expenses that I think surprise buyers even more than some of the ones we've already talked about. These last two aren't necessarily part of the transaction itself. They're costs that often show up after you get the keys. The first 90 days after closing. One thing I always encourage buyers to think about is what happens after you get the keys. A lot of people spend so much time focusing on getting to the closing table that they forget that they're about to become a homeowner. Maybe you decide to repaint a few rooms, you need blinds or curtains, you buy a lawnmower because you've never had a yard before. Maybe one appliance decides it's the perfect time to stop working. Or maybe there are a handful of smaller repairs that weren't major enough to negotiate during the inspection, but now they're your responsibility. None of those things are usually huge on their own, but together they can add up pretty quickly during those first few months, especially after you just put your down payment and closing costs on the home. One recent transaction actually comes to mind. During the inspection, the inspector noted that the water heater was older, but it wasn't leaking and it was still functioning properly. We talked about it with my buyer and everyone understood that it is probably going to need to be replaced at some point in the future. Then while the seller was moving out before closing, she noticed that the water heater had started leaking. Instead of leaving it for my buyer to deal with, she went ahead and replaced it before closing. So my buyer ended up moving into the home with a brand new water heater instead of an older one that could have failed shortly after moving in. I also had another buyer who moved into their new home and they discovered a plumbing leak that was supposed to be repaired before closing, and it hadn't actually been fixed. Fortunately, we had everything documented throughout the transaction, so I reached back out to the listing agent and worked with the seller to get the repair completed at no cost to my buyer. It all worked out and the buyer was thrilled. Every transaction is different, but those are just a couple of examples of why I tell buyers that closing day isn't the end of the story. Before we wrap up, I want to mention a few other costs that probably don't deserve their own section, but they're still worth keeping in mind. The first is moving costs. If you're relocating from another state, moving expenses can add up a lot faster than people expect. Between movers, packing supplies, temporary storage, hotels, and travel expenses, it's something I always encourage buyers to budget for early. If you're buying new construction, don't assume everything that you saw in the model home is included. I've had buyers walk through a beautifully staged model home, assume everything they were looking at came with the house, and then when we're going through the contract, they realize not all those items were included. Depending on the builder, things like a refrigerator, washer and dryer, window coverings may not be included. Adding those items after closing can easily cost several $1,000s, so it's important to know exactly what's included before you sign the contract. If you're buying a resale home, you may also want to budget for things like changing the locks, installing a smart lock, or a security system is also important. Or, maybe there's just some projects that you wanted to take care of before you move into the house. None of these expenses are usually deal breakers, but together they can add up pretty quickly. The good news is once you know that they're coming, you can plan for them instead of being surprised after closing. Hopefully this video gave you a better understanding of some of the costs and questions that don't always come up until you're already under contract, since a bit of preparation up front can help you avoid costly surprises later. If you're planning a move to the Seattle area and you'd like some help putting together a game plan, feel free to reach out. Whether you're still narrowing down neighborhoods or even if you have a specific home in mind, I'm always happy to answer questions. If you found this video helpful, I'd really appreciate if you gave it a like and a subscribe. I put out new videos every week to help people make a smoother move to the Seattle area. Thanks so much for watching, and I'll see you on the next one.